Hello and welcome to the first episode of Smaulgld Subscribers Ask Smaulgld. The purpose of this program is to have Smaulgld subscribers ask questions that they may have about the financial system or gold and silver. And the types of questions that we intend to receive on this program are not ones that you can simply look up, but more along the lines of the Smaulgld Speculation series, where we discuss current situations and try to understand how those situations may play out. And I have the pleasure of having with me a returning Smaulgld subscriber on the line, Hoshea Greenfield, and is the first participant in the Ask Smaulgld series. How are you doing today, sir?
Pretty good. Thank you for having me again, and I appreciate the opportunity to ask you and discuss with you some issues that are in interest to me.
Okay, well, thanks for joining me. And just to let our listeners know, the derivation of this was we were having a email exchange and some very interesting comments, and we thought the best thing to do is maybe to have a live discussion on what we were talking about. And what Hoshea was interested in discussing is what's going to happen now if the Federal Reserve decides it's going to go through its reduction of the balance sheet, the so-called unwinding or quantitative tightening. Now, we know that the Federal Reserve has managed to raise interest rates over the past couple of years, a very modest amount, but so far they have not normalized interest rates, and now they're talking about unwinding their balance sheet. And today we're going to discuss, or Hoshea is going to ask, what's going to happen. So what's on your mind now? What are the types of questions you have about the recent announcement by the Fed that they're going to start unwinding their balance sheet?
Right. So the unwinding of the balance sheet, there are a few different scenarios or narratives that I'd like to discuss with you and hear your comments and your ideas about them. And I'll start with the Federal Reserve narrative or scenario that they have in mind of what's going to happen. And what they're thinking is that the economy is strengthening and QE worked, quantitative tightening or unwinding the balance sheet is on its way, and therefore a strong dollar and a strong stock market is consistent and nothing has to give. Not the stock market and the dollar can maintain strength. So I'll go to the second scenario, to the biggest critique to that scenario, I think, or one of them is Peter Schiff, and there are many things that I think you and I agree with Peter Schiff, not everything, but I want to describe the way I understand what Peter Schiff's point of view regarding this, and he definitely disagrees with the Federal Reserve that the economy is strengthening or in a good situation. He thinks it's pretty bad, and that the QE that the Federal Reserve has been doing in the past few years was the easy part, and that the quantitative tightening is in a meaningful way is not possible. So because the economy is so weak, the Federal Reserve could only talk about unwinding the balance sheet, but they're never going to do it in a meaningful way. They might do it 10 billion here, 10 billion there, like they've raised rates a couple of times, but it's not going to actually normalize the balance sheet. And let's say normalizing it is 1 trillion, 1.5 trillion, $2 trillion off the balance sheet. Let's call that normalizing. And he claims that that is absolutely not possible, and therefore a strong dollar and a strong market are not consistent, and something has to give. And he thinks what will give is the dollar, and the Federal Reserve, once it's obvious that the markets are not strong and the economy is not doing that well, they're going to launch QE4, and that's just a matter of time. And after that is clear that they're backing from quantitative tightening, then the dollar will really get a hit, and the dollar is basically toast. That's Peter Schiff's position, And I'd like to hear what your thoughts about that.
Well,
If you, yeah, go ahead.
sure. I mean, one of the things about Peter Schiff that I just want to note before we get into the discussion is his entire thesis has always been that the dollar is toast, that gold is going to go higher, and that basically I agree with him that it's the easy part is doing the stimulus, the harder part is unwinding, the easy part is lowering interest rates, the harder part is raising them. However, the Fed has managed to demonstrate that, not that it's going to normalize rates, and I never thought that they could normalize rates, but I don't take the extreme position that they can't ever raise rates as Peter did. And Peter thought they would never raise rates, and then when they raised them once, he said, that's no big deal. When they raised them the second time, he said, that's no big deal. Raised them the third time, he said, well, no one expected them. I had never expected. He starts to act as if each successive rate hike never happened, because it goes against his narrative that somehow the Fed can't raise rates. So I think he's doing a bit of the same here, that he's saying basically the Fed can't really normalize its balance sheet, in fact won't do anything, when indeed I think they're going to do exactly what they did with the interest rate hikes. They will say they're going to normalize their balance sheet and sell off $10 billion a month, and then maybe they won't get to their goal. But I think what they will do is they will make at least more than a show of it, and they will start to unwind the balance sheet, and they'll do that at $10 billion. I think what they said was, if they do have an issue where the economy hits a road bump, then they're not going to stop unwinding the balance sheet. They are going to go back to lowering interest rates. So that's
Right.
I think Peter is right, but I think he takes the extreme position that everything turns out to be the dollar is toast, gold goes higher, and the Fed basically can't do anything without collapsing the economy. And one of the things, just before you go to your next scenario, is I don't think that the Fed wants to collapse the dollar because just to save the stock market, because the United States needs the dollar. The Fed needs the dollar. If the United States doesn't maintain the dollar as a world reserve currency and a demand for the dollar, then everything else doesn't matter. So I don't agree that the Fed is on a suicide mission to destroy the dollar. In fact, if you look at what happened over time, when the dollar index fell and fell during each successive QE, when it got to a certain point, they stopped. And if you notice what happened, and Peter's right about this, when they stopped the last QE, the dollar index rose about 25% on the assumption that the Fed was going to do all these interest rate hikes and normalize it. And now he's right also that it's become clear that they're not going to do that. They're going to do something modified. Well, the dollar index has dropped about 12%. So basically the Fed has done less than half of what they said they were going to do in terms of tightening. And so the dollar index gave back a lot of its gains. And now I think the dollar index is not really reacting, although it has reacted somewhat to the hawkish tone about reducing the balance sheet. The dollar index is starting to creep up. But I think this time it's not going to creep up on the expectation that they're going to reduce the balance sheet, because most people are thinking they'll probably do exactly what they did with the interest rates. They won't raise them that much. They won't really reduce the balance sheet that much. But again, you can see how clever they are. The dollar index right now is still far higher than it was during the QE periods. It's at 93. It was in the 70s. So it did get as high as 101, 102 in January earlier this year. But they've managed, they know how to play the game to keep the dollar within a range, a dollar index within a range.
Right, but I think the dollar is not, I think Peter Schiff is right that the dollar is not collapsing, because the markets still believe that quantitative tightening is on its way, and the QE was successful, and a significant reduction of the balance sheet is going to occur. So therefore, the dollar is not collapsing. I do agree with Peter that if it comes up, if it will be apparent that that is not a scenario and that's not going to occur, then the dollar will lose a lot of ground. But my scenario that I was thinking of, that I didn't see many people discuss, is the possibility that quantitative tightening or unwinding of the balance sheet will be significant. And again, let's say $1.5 trillion is significant, or $2 trillion, what have you. And by having other central banks that are continuing QE as we speak, the world is, the other central banks are in the process of QE in excess of 300 billion a month, and even with the unwinding of the Federal Reserve, that's over 3 trillion a year. And what is basically stopping, and we all agree, I think you and I agree, that the central banks work in collusion, that they're coordinating their attempts to manage the monetary global stage or scene. And what is basically stopping central banks, specifically the ECB and the Bank of Japan, to shift some of their QE towards buying from the Federal Reserve their bonds, and helping the Federal Reserve reduce in a significant way their balance sheet. Again, let's say $1.5 trillion by buying QE. I mean, that's exactly what, to a lesser degree, the Swiss National Bank is doing. They're printing Swiss francs, and they're buying, they're trading them for dollars, and they're buying securities, foreign securities, American stocks and other securities, with those freshly printed Swiss francs. So the Swiss national franc is not a big central bank in comparison to the ECB and the Bank of Japan. But what if the ECB and the Bank of Japan and other central banks participate in exactly what the Swiss National Bank is doing, and by printing their currencies, exchanging them for dollars, buying securities, American securities, treasuries, by doing that, propping up the dollar and the stock market, American stock market simultaneously, the price paid is a weaker currency of Japan and the euro and maybe other currencies.
Well, you ask a good question, and it's probably one that the Fed already has an answer to. I don't think that they would announce a wind down of their balance sheet unless they knew that they had purchasers. So we were talking in the interview about the Bank of England, yes, the ECB and the Bank of Japan are basically under the control to a certain degree, or largely, by the United States. And if you think about what's happened in the past, when the United States ended QE in at the end of 2014, well, the Bank of Japan launched their own. If you also remember, Stanley Fischer was Mario Draghi was his protege, and he convinced him to do QE. Remember, Europe had never done QE. So it seems like you're right. The central banks coordinate their moves, and if it makes sense that the Fed is doing something, they're not going to do something that's going to shock the other central bankers. They've already got this worked out, and I think you're right that the Bank of Japan and the ECB are going to pick up the slack. Now, remember, the ECB has talked about they still need to do their bond buying program, and they've kind of indicated that they've run out of bonds to buy.
Right.
And I think
that's a great point.
And the Bank of Japan is probably in the same position because they're just buying BOJ. So the Fed's
completely cornered that market already, and they're out of securities to buy, and it just makes sense that they're going to go to the endless supply of treasuries.
Exactly. So we've got the Bank of Japan, we've got the Bank of the ECB, we can add to that, although they're not as significant, like you mentioned, the Swiss National Bank. You've got the Bank of England, you got the Bank of Canada, you got the Bank of Australia, Bank of New Zealand. You have all these other Western banks that also have an interest in the way things are. And the other thing that's quite possible is China. You know, China, for all the talk about de-dollarization, China has built its economy on the strength of lots of stimulus and a cheap yuan. Well, the last thing they probably want right now, if they are to keep their economy going, keep their population fed, they're not going to want the yuan to strengthen because the United States can't pull off this quantitative tightening and then have the dollar collapse, because China is in a position where they've had about 200 million people move from the country into the cities, and they're employed right now. And part of what China is, most of the way China has created its economy is twofold: internal debt, which now the debt to GDP ratio is about 300%, and that's in the form of stimulus, centrally planned stimulus, building bridges, roads, and ghost cities. But then the other bulk of it is from massive exports to the Western countries. So while the United States has a big difficulty, as Peter Schiff says, in pulling in the magician trick of pulling the tablecloth out and not having the glasses break, and he actually says you got to try to pull the table out and see if you don't break anything. China has the same issue. If China's yuan strengthens to the point, because the U.S. dollar is weakening, then good luck for them trying to maintain the GDP that they have right now, which is providing the standard of living and is keeping the Chinese people fed and happy. So they, while they may not be under the thumb of the United States where they can tell them this is what you got to do, they will act in their own self-interest probably and continue to buy dollars to prevent their economy from slowing down because the yuan might strengthen.
Well, I agree
with. Let me
with
give one further point. The other potential buyer also is U.S. mega corporations like Apple and Google, who own $100 billion already of U.S. treasuries. So I don't think we're going to have a shortage of countries that are told to buy U.S. treasuries, countries that find it in their interest like China to buy them, and then even corporations.
Right. I agree regarding China with the caveat of I do think that China, at least in the long term, want to have a greater position in the monetary global scene or stage, and by doing that, that means pushing aside a little bit in gradual manner the dollar, having less demand for the dollar, increasing some international demand for the yuan. I think that is the interest of China, maybe not in the short term, but definitely in the medium or long term, enjoying the perks that the United States managed to enjoy by being the reserve currency for the past 100 years and to a greater degree since 1971.
Right. The trick there is just like the United States. How do they wean themselves off the monetary stimulus, the monetary heroin, and achieve their goals? Because you can't have it both ways, because if they strengthen the yuan and they're not able to do as much stimulus, they're not going to be in the same position. Now, if they want to continue the way they're going, and they think, well, we need to do more stimulus, and that debt to GDP goes 300%, 400%, 500%, well, then how are they ever going to be a world reserve currency if basically the world knows that they've fabricated and they're massively in debt all of their growth? So they all have they're all in the same debt game together, I think, and that they all need to buy each other's debt, and they know that a lot of what they have right now they owe to debt and stimulus. It's not like China's prudent and the United States is reckless. And to your point, the United States needs to appear not reckless. China can afford to be reckless because they can say, well, look at all we built, look at all we've grown. The United States is already perceived as reckless because the United States is perceived as having gained its military and gained its social security and its other things via loaning money to foreigners. So it has to cut back on that perception. That's why it's raising rates, and that's why it's ending the balance sheet. But right. All the banks are involved.
That's why it is a little bit different talking about the dollar and other currencies. Because of the status of a reserve currency, the dollar has to maintain a more prudent position in the monetary stage, and they can't afford to go ahead and do reckless monetary policies to the degree that other countries
Correct.
Can allow themselves. So, and I think I agree with you about China, but I definitely think that the Western central banks have a vested interest in maintaining the status quo, meaning having the U.S. dollar as the reserve currency, because they all enjoy that status quo, and they will perhaps help sacrifice some of their strength of their currencies in order to prop up the dollar by continuing the QE that they're doing as is, but just shifting some of it to have some treasuries by that excess of treasuries that the Federal Reserve is going to sell, and I think that may be in a very significant way. And so opposing what the idea of Peter Schiff that is not possible. I think it is possible if other central banks, take their fair share, or whatever term you want to use to describe this, and buying the treasuries from the Fed.
I agree, and in Peter's defense, everything Peter says is correct if you do not have central banks, and the Fed is just acting alone as this rogue printer of money and lower of interest rates. But the Fed gets an assist from basically the other central banks in the world, and that's what prevents his scenarios from coming true. Is that they all are in on the debt game and they help each other out. Because if they didn't help each other out, when the United States did $3 trillion worth of QE and lowered rates down to zero, it should have been, as the colloquial expression, game over. But that hasn't happened because, as you say, they get an assist from their allies, and they also get assists from even countries that may be opposed to them because they all have a vested interest in the debt-based fiat economy.
So my next question regarding this, I am a portfolio manager, and I have some positions that I want to put myself with regards to these different scenarios. What do you think that if that is true, that other central banks are going to take that slack and purchase treasuries, continuing QE, and actually helping the Federal Reserve reduce the balance sheet in a meaningful way? Will that mean that gold will not increase in price, in dollar price, might increase in terms of other currencies, euro, yens, what have you? But in terms of dollars, do you think that it is a possibility that the gold will continue being sluggish and won't really have a outbreak?
The goal, it seems, of each fiat currency issuer is to basically maintain confidence in its own currency. And one of the things that gold does when it rises against the currency is it indicates that people think that their currency is not doing that well. And I think all central banks realize that gold is a threat, so they all combine together to work against gold. And I think what's going to happen with gold, what normally would happen is if you saw all this money printing, you would just say, well, I've lost confidence. I'd rather have the gold. Well, they've done two things. They all work together so that all fiat currencies are in on it. So no one fiat currency looks that much worse than the other fiat currency. But the other thing they've done is they've reduced the demand, or they've satisfied the demand for people who want gold in a safe haven through futures contracts and ETFs, because the bulk of gold demand is satisfied by far by people buying ETFs and gold futures contracts, which means there's actually more gold to buy or to invest in through these vehicles than actually exists in the world by a function of, you can estimate 10, 20, 30, 100 times. So they've managed to keep the gold demand down by flooding it with supply. So it's all coordinated, because there's no way that gold shouldn't be higher if it was just a supply demand based on the physical amount of gold that's out there, because there's now more people in the world than ever, far more on a percentage basis than there is gold. And there's more people in the world today, if you include people now in China and India that didn't have money 20 years ago, that are interested in buying gold. So they have managed to suppress the price of gold so they can continue doing what they're doing with the fiat. And the question, I guess, for you, you can get it back to me, I can't answer it, is how much longer can they do this? Can it go on indefinitely if all the central banks are basically working on a fiat debt-based system where, look, if they all do QE, no one looks like they're being reckless. If they're all buying each other's bonds, it all looks like everything is fine.
Exactly. So the question is really, what is different? Because this has been going on for the greater part of the the last decade.
Correct.
And
And increasing.
why
And
why
increasing.
won't it continue and for another decade or two exactly in the same manner, having reckless monetary policy coordinated between all of these central banks, maintaining the U.S. dollar's status as a reserve currency, guarding that with all costs, and continuing the COMEX fakery for forever. Basically, my question is: do you think there is a possibility that won't continue, or will that relationship break somehow?
Well, I think the question, the operative word there is somehow. Everyone likes to say it's unsustainable. Everyone likes to say it can't go on. But what is it going to be that breaks it? Now, normally in a free market, if you have, and I'm talking about a regular non-government intervention, just a free market, when you have things that are out of whack, there's disequilibrium. Something happens and brings it back to equilibrium. The bubble bursts or whatever. But when you have markets, financial markets, debt markets, all controlled by central banks, it's almost hard to see, because it's artificial, it's hard to see how market forces can overwhelm a market which is run not as a free market, but run as a controlled market. Because, as we mentioned, who's going to buy the Fed bonds? Well, if it came down to who's going to buy them in the free market, you'd say, well, why would they want them? But if the other central banks are buying them, that actually creates a demand for them, because if the Fed starts unwinding its balance sheets and the BOJ and the Bank of England, the ECB are buying them, and even China's buying them, why wouldn't the people in the free market buy them too? And
right, that's what happened. They front run the Federal Reserve,
right,
by buying the Treasury.
So as long as
there is no reason. Go ahead. Sorry.
Well, I was going to say, as long as people are being rewarded in the free market, so to speak, by playing along with the fiat game, they're actually making it a disincentive to buy gold, because you're not going to get rewarded for holding gold. They're going to make sure you don't get rewarded for buying gold. They're going to make sure you get rewarded for buying into the debt-based system. You're buying equities, whatever it is. And no stock market goes up 7-8 years in a row. I mean, that can't happen. The profits of those companies don't warrant what's happened over the last 8 years.
So I guess what we agree is that it is within the power of central banks to maintain this game for the foreseeable future, unlike what Peter Schiff is out there saying, that this has to give something has to give really soon, and it will be the dollar.
But why? But the thing is, if all the central banks don't want the dollar, because they would all suffer their own issues if the dollar were to collapse. We mentioned China would have major issues. No one is willing, and if you think about what Peter says, he's right. Politicians are never, ever, ever willing to say, you know what, this is going to hurt. I'm going to deliver the medicine. I'm going to make it hurt. It's going to suck for 18 months, but then we're all going to get better. No politician has the courage to do that. Do you think China, which is as centrally planned as they come, is going to tell the Chinese people, hey, guess what? You know what? You moved out of the country. It's going to suck for 18 months. The regime would collapse. So they're not going to like step forward and make a bold move. No country's politician is going to step forward and make a bold move. The question is, what pops the debt bubble? I don't know. I don't have an answer. I don't know. It's not sustainable, but what is it that changes?
But it is. But the claim is that it is sustainable as long as QE is occurring, and we kind of agree that QE is in this bizarro world. QE is kind of sustainable if all central banks do is coordinate between themselves, and they have a mean to suppress gold. Then why is it not sustainable? I mean, the debt could increase for indefinitely.
Now, I don't want to put in a plug here for Bitcoin, because it's not what I think, but it could be something like this. It only would happen if there's an alternative financial system that people flee their own financial system. But I say good luck with that, because governments and central banks are not going to allow whole-scale tens and hundreds of million people to flee their systems into something else, because
as long as they have the power to prevent that, for sure they're not going to go along with that.
Correct. And most people are not going to want to take the leap out of a system that essentially is rewarding them. So I guess, for example, if China decided to do something which I would consider imprudent, decides it's true this, we're going to let the yuan rise, we're going to just be really prudent, we're going to slash our debt, we don't care if we have 30, 40% unemployment, we want to make sure China is the most prudent central bank out there, their people would revolt. They would go somewhere else. So they wouldn't even be able to say, now we're prudent, because they wouldn't exist anymore. That's the danger. That's the only way something...
You're saying that because of unemployment that would occur because of a strong yuan.
Not just, yes, because of the strong yuan, mean they won't be able to export as much, and also because they say we're not going to build ghost cities anymore. We're not going to provide employment for people for things to build stuff that we don't need, because that just basically is no return on investment. That just adds to our debt load.
But my claim is, even if we take the position that China wants to weaken the dollar, and I agree that that's not a reasonable argument, but even if we go along and say that China wants that, just like I think we agree that Russia does, then the other central banks around the Western central banks still have enough power to prop up the dollar, regardless of what China decides to do monetarily.
Right, and especially if China then basically implodes on itself, then they become a lesser entity, which I don't think China wants to become a lesser entity. China can only maintain its ascendancy through central planning stimulus. It can't cut back on it and continue to grow. And if it doesn't continue to grow, well, then their relevance becomes lesser. And they don't want less relevance, they want more. So everybody has an interest in, this is mutually assured destruction here. They all have to play this game. The question is, what breaks it? And I don't see how it breaks, other than I know it can't go on. But why do I know that it can't go on? Because there's no historical precedent for this. This could just be a takeover, and this is how things are.
Right. So exactly. No one could say that it can't go on indefinitely. We assume right. That a Ponzi scheme can't go on forever, but maybe it can, or at least for a very, very, very long time.
You mentioned a good point about a Ponzi scheme. Yeah, a Ponzi scheme can't go on when those in charge, those in power, find out about it and people lose money. But if the world is run as a Ponzi scheme, then they just say, well, the issue with a Ponzi scheme is you always need more money coming in. Well, they control that.
Exactly.
So if you and I need to go out and like continue a Ponzi scheme, we got to go find more and more, and finally we can't find any more. That's because we have a limitation on how many people we can scam.
Exactly right. So as long as they could suppress the gold as the nemesis of fiat currencies, then they're good to go, I guess.
And the same with Bitcoin, because the issue with Bitcoin is, I know Bitcoin people like to say not a lot of people have it. It's not really a viable alternative right now. It's not like there's 300 million people that want Bitcoin the way there are 300 million Indians who want gold. Now they say one day that'll happen. I don't know if that'll happen. I think the people that like Bitcoin are fully aware of all the financial shenanigans and so on. And a lot of them are buying it just because it's going up. I don't think they're viewing it as a safe haven.
Yeah, I agree.
So
I mean, I don't know what the future holds for Bitcoin, and I wish it luck. I hold Bitcoin, but I agree that it seems that the power at B have the power to curtail maybe that as well. Who knows?
Yeah, who knows? So, any other questions?
I didn't prepare any other question at this session, but I'd be happy to do this again. This is a lot of fun.
Oh, definitely. Well, thank you very much for being the first on this series. If we get positive feedback, I've enjoyed it. Maybe we'll just do it anyway if we don't get positive feedback. But thank you very much for joining me on the first Ask Smaulgld episode.
Absolutely. Thank you, Louis. I appreciate this.